Have you noticed that some bank branches are disappearing? Don't worry, it's not your imagination. Big banks across America are closing branches at a rate that would make your head spin. But why is this happening? The answer, my friends, is a bit complicated. It's a perfect storm of changing technology, economic uncertainty, and good old-fashioned cost-cutting. Remember the days when you had to physically go to a bank to deposit a check or withdraw cash? Those days are fading fast. Now you can do almost all your banking online or through your phone without ever leaving your house. And guess what? Banks love this. It saves them a ton of money. But it's not just about technology. The economy has been playing a role too. Inflation, rising interest rates, and the lingering effects of the 2023 bank failures have made banks extra cautious about spending. They're looking for ways to trim the fat, and closing branches, sadly, is one way to do it. So what does the future hold for bank branches? Well, it's not all doom and gloom. Some banks are transforming their branches to offer more specialized services like financial advice or small business loans. Think of it as a way for banks to stay relevant in a world that's increasingly moving online. Stay tuned because the banking landscape is definitely changing. Let's face it, we live in a digital world. We order groceries online, stream movies on demand, and even attend virtual doctor's appointments. So why should banking be any different? The truth is, it's not. Online and mobile banking have taken the world by storm, and for good reason. With just a few taps on your phone, you can check your balance, pay bills, transfer money, and even deposit checks. It's convenient, it's fast, and it's available 24/7. No more waiting in line at the bank or rushing to make it before closing time. This shift to digital banking has had a profound impact on traditional bank branches. Think about it. If you can do all your banking from home, why would you bother going to a branch? As more and more people embrace the ease of digital banking, foot traffic at branches has plummeted, making them less profitable for banks to operate. But it's not just about convenience. Digital banking is often cheaper for banks too. They don't have to pay for tellers, rent for large buildings, or utilities. It's a win-win for banks, even if it means saying goodbye to some of their brick-and-mortar locations. Banks, like any business, are always looking for ways to save money and increase profits. And in today's economic climate, that means making tough decisions. Closing branches, as painful as it might be for some customers, is one way for banks to cut costs and stay competitive. Think about all the expenses that come with running a bank branch: rent, utilities, security, maintenance, and of course staff salaries. By closing branches, banks can significantly reduce these overhead costs. It's a no-brainer from a purely financial standpoint. But it's not just about saving money. The banking industry is facing increased competition from new players like online-only banks and financial technology companies, or fintechs. These companies often offer lower fees, higher interest rates, and a more user-friendly digital experience, putting pressure on traditional banks to adapt or get left behind. To stay competitive, some banks are merging with each other, creating larger institutions with even more resources. This consolidation can lead to branch closures as well, as the newly merged banks try to eliminate redundancies and streamline their operations. It's a dog-eat-dog world out there, even in the world of finance. So does this mean that bank branches are going the way of the dodo bird? Not necessarily. While some banks are closing branches left and right, others are taking a different approach. They're transforming their branches into more customer-centric spaces that offer specialized services and advice. Imagine walking into a bank branch, and instead of being greeted by a row of tellers, you're met with comfortable seating areas, coffee stations, and financial advisors ready to discuss your investment goals. This is the future that some banks are envisioning. Instead of handling basic transactions, these revamped branches would focus on providing personalized financial guidance, helping customers with complex financial products like mortgages and investment accounts. They could become community hubs where people go to get expert advice and learn about managing their money. Of course, not all banks will make this transition, and some branches will inevitably close their doors for good. But for those that adapt and evolve, the future of banking could be brighter than ever. Only time will tell what the future holds, but one thing's for sure: banking will never be the same again.